Did you know that filling out your W-4 correctly could save you thousands when it comes time to taxes the upcoming year, and could potentially make you thousands if you do it the correct way? Well, in this video, I'm going to show you how to fill out the W-4 in 2025 so you can put yourself in the best position possible for you. That being said, let's dive straight in. Take notes and definitely share this with somebody else who you feel may benefit. Now, where am I? The IRS.gov website. I recommend that you go to the IRS.gov website to access your W-4. You do not have to get this from your job solely. It's a public document. You can access it directly here. However, we're going to go a step further, and instead of just focusing on the paper document, as many people are accustomed to, I want you to understand the estimator tool, because it is critical in terms of you getting the most out of the W-4 and not being caught off guard by not knowing what the outcome can likely be. So how do we access that tool? Glad you asked. So at the IRS.gov, there are a couple of ways to access it. The simple way is to just hit the search button. Once you're at the IRS.gov, type in estimator. Once you type in estimator, you hit search and it'll pull up this tool. It says recommended by the IRS tax withholding estimator. Check your tax withholding with the IRS tax withholding estimator, a tool that helps ensure you have the right amount of taxes withheld from your paycheck. So you click that and then it brings you to this page. Now, it's really interesting how some people tell you not to touch the W-4, and they have all of these concepts or ideas based on their own fears. But right here on the IRS, it lets you know everything you need to know about the tool. And then when we dive deep into the tool, you'll see the power within it. So it says use this tool to estimate the federal income tax you want your employer to withhold from your paycheck. This is tax withholding. See how your withholding affects your refund, take home pay, or tax due. Now, the key thing that I want to point out is right here. It says use this tool to estimate the federal income tax you want your employer to withhold from your paycheck. That means that you are in control. So type that in the comments. I am in control. Because so many times people think that the employer or the HR department are the ones who can tell them how to go about filling out this form or how much taxes should be taken out. No, that power has always been in your control, whether or not you pay or overpay when it comes to income taxes. This tool lets you know that. And that one sentence, a lot of people overlook it, but it's based on you. It says the federal income tax you want your employer to withhold from your paycheck. And then it says, see how your withholding affects your refund, take home pay, or tax due. So what you do with the W-4 can offset your tax refund. What I teach you about the W-4 can enhance your tax refund. It can also offset your take home pay, meaning that you have the ability to bring home more money. Give yourself a pay raise without asking your boss if you understand how to properly use this form. And it can determine your taxes due depending on your situation. So how it works: use this tool to estimate your federal income tax withholding. See how your refund, take home pay, or tax due are affected by withholding amount. Choose an estimated withholding amount that works for you, and the results are as accurate as the information you enter. So the more accurate you are with the information, then the more accurate the results will be. So it's very important that you follow these things and understand exactly what you need. So it says have this ready. Pay stubs for all jobs, spouse included. If you're married, of course. Other income info, side jobs, self-employment, investment, etc. Most recent tax return. That's key to have so you can just know if you qualify for certain things. A lot of times it's not mandatory for most people to have their most recent tax return, but I'll let you know why it is key based on some of the questions that they ask. And then it says your information isn't saved. Learn more about security. So basically, when you're filling out this, it's not saving your information. This is not submitting it within itself. It's an estimator tool that you can use so you can understand what your tax situation is likely to be. You're not even putting in any personal information, so don't get scared of the tool. The goal of the tool is to just know how to put your numbers in, so that when you're done and they issue out your results, now you have the actual W-4 form that you can put in your personal information and then fill it out accordingly. That's that. So use the tax withholding estimator tool. So let's dive straight in. In this example, we're going to be going over a person who is head of household. Head of household, basically, well, I'll let you know what that means and show you how you can find it, because a lot of times people mix this up as well. But we're going to be doing head of household. If you want any other different situations, examples, then drop it in the comments and I'll do an example about that situation as well. But right here it says use your best estimates for the year ahead to determine how to complete Form W-4 or W-4P so you don't have too much or too little federal income taxes withheld. So the W-4P is basically for someone who's has a pension that's being taxed. Pension, you know, it's come from someone who may have worked a job that contributed to a pension and now they're retired and now they have the option to also fill out the W-4 form, but it's known as the W-4P. And then the Form W-4, you already know. So step 1 of 6, about you. Information about you. Select the information that best describes how you anticipate filing your 2025 tax return. All fields marked with the asterisk are required. What filing status will you use for your tax return? Now, this ties into what I just mentioned about head of household. So here are the 5 statuses that a person can choose. Single, married filing jointly, married filing separately, head of household, qualifying widower. Now, anytime you see that blue question mark on the side, it lets you know that it informs you on some things that you may have questions about. So if you are in doubt of anything that has a question mark nearby, just tap the question mark and then it'll open up an explanation. In this one, they specifically talk about a few of the filing status. The first one, which we'll be going over in this video, is head of household. Generally, you may claim head of household filing status on your tax return only if you're unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or qualifying individuals. The key in this is saying unmarried. Sometimes people are married and then what happens is they feel as though just because they are the breadwinner that they're head of household. That's not how it works. You're the head of your household in some cases. It's just not you're head of household from a tax filing scenario. Head of household is unmarried and you're paying more than 50%, more than half of the cost to keep up a home for yourself and the person that you're going to be claiming, which is your qualifying dependent or plural or other qualifying individuals. So that's what I want to hit on. Of course, they talk about the qualifying widower, and then if that's something you know that fits you, you would read into that as well. But head of household is unmarried, and basically they have a dependent that they're paying more than 50% on. So we're choosing head of household based on the details that I have coming soon. Do you or will you have a job or pension that regularly withholds federal income taxes from your paychecks or pension payment? Yes. That's why we're filling out the form, because we have something that is regularly taking out taxes. Of course, you can hit the question mark and it lets you know periodic paychecks or payments and federal withholding. If you're an employee, your employer probably withholds income tax from your paycheck and pays it to the IRS in your name. If you receive periodic pension payments, you may have federal income tax withheld from those as well. You can use this estimator to prepare a new Form W-4 for your employer and a new Form W-4P for your pension provider to ensure that you are not having too much or too little income tax withheld by the end of the year. Now, I'm not going to click on every question mark because I want you to get the good out of the video, but I just want to point to the fact that these question marks can be insightful. Now, let's keep going. Select any that apply. I plan to claim dependents on my tax return. Yes, we already determined that. Next, income and withholding. Enter the information for each job and pension you will receive income from this year. To use this tool, you need to have a job or pension subject to tax withholding if you have Social Security income and you prefer to have tax withheld from your job or pension to cover the additional income. Select 2 or more sources of income and enter information for your job or pension first. After that, you will be able to enter your Social Security income. All fields marked with the asterisk are required. How many jobs will you have this year? In which federal income tax is regularly withheld? Include this year's past, present, and expected future jobs. The first one has been added for you. So if you have multiple jobs, you'll fill this out multiple times. In my example, it's only one person who has one job. So we're just keeping that at 1. Your first income source. This right here is an hourly job. You fill it out according to your situation. Select what best describes when you earn income from this job. The person plans to earn all year from the 1st to December 31st. How frequently are you paid? And this one is every 2 weeks. Every 2 weeks is different from twice monthly. Twice monthly is like the 1st and the 15th, the 5th and the 20th. Every 2 weeks is every other Friday, every other Thursday. So sometimes you can get paid 3 times within a week. Within a month. So just understand the difference. So this person, every 2 weeks. Enter your most recent pay stub. So we're gonna say that that person's most recent pay stub was the most recent pay stub. Let's say it was January the 24th. What was your most recent pay date? No, the first one was, when did your most recent pay period end? We're going to say the 24th. The most recent pay date, we're going to say, was the 31st. Select the option that best describes your current situation. My last paycheck was a good representation of how much I earn each pay period. We'll say yes. Enter wages per pay period. This person, they earn $65,000 a year, and each time they get paid, they earn $2,500. Enter wages earned year to date. They've been paid twice this year, so we're going to say $5,000. Based on the information provided, it looks like your total income from the job this year will be $62,500. Is this correct? We'll say yes. I said around $65K, but we'll say yes. Enter federal taxes paid per pay period. Taxes per pay period is $250 because they fall into a 10% tax bracket. Let's just say they pay in $250 per pay period. Enter federal taxes paid year to date. Well, they got paid twice, and as a result, they paid in taxes twice, and $250 times 2 is $500. Select any that apply for this job. I contribute to the 401k, contribute to a health insurance plan, getting a bonus, got a bonus, none of the above. So on this one, we're gonna say none of the above. If you fit any of those descriptions, then of course you'll address it accordingly. Other sources of income. Do you have any other sources of income? In this case, we're gonna say no. Withholding and estimated tax payments on other sources of income. So we said there's no other sources of income. We'll leave that blank as well. Then we'll click next. And remember, it didn't have an asterisk by it, so it wasn't mandatory for us to fill it out. Adjustments to income. And this one won't have any adjustments to income. We'll go over that in some future videos, or if you have a special request, drop it in the comments and I'll include it in a future video specifically for you. So no adjustments. We'll hit next. Deductions. Standard or itemized deductions. No, I'll take a standard deduction. So the difference is basically when it comes to standard deduction, that's something that everybody gets access to. The standard deduction is a specific dollar amount that reduces the amount of income subject to tax. And this is based on your filing status. So basically, if you're filing single, that's one form of a standard deduction. If it's head of household, that's another. So it's based on those things. Itemized deductions tend to include things that you may be writing off outside of a standard deduction. But in order for it to benefit you, it must be higher than the standard deduction. So it's important to understand the difference, but for most people, they're going to take the standard deduction. In this case, the standard deduction is $22,500 for a person who is head of household. So if your itemized deductions are not more than $22,500, then you're better off just taking the standard deduction. Next, tax credits. So on here, tax credits are amounts you subtract directly from your tax obligation. You previously stated you plan to claim dependents. Use the open child and dependent credits section to provide details for any dependent related tax credits. How old will you be on January 1st of next year? We're going to say the person is going to be 40. Let's just say 40. All right, child and dependent care credits. You indicated you have dependents. Enter the age for each dependent you wish to claim. Let's say the child is 11. Child and dependent care credit. Enter the number of qualifying children for child and dependent care credit. We're going to say 1, because this is based on if you qualify for a child child or dependent care credit last year. Well, take that back, not dependent care credit, because this child is 11, they're not getting dependent care. I'm thinking about the child tax credit. So we're going to leave that one blank. Enter the amount of qualifying work-related child care expenses. So they don't have that, we'll leave that alone. Earned income tax credit. If you qualified for it last year, good chance you may qualify for it this year. And the earned income tax credit is limited to 3 qualifying children. We'll put that at 1. Let's make sure we ain't leave anything. Child tax credit, yes, we're good, we're good, we're good. And there are a lot of different things that, and a lot of different examples that we'll go over. As you can see, there are a lot of different things that can be included in these credits and give you potential tax savings just off of the list that you see right here before us. But for now, we'll just go ahead and hit next. And once you hit next, it brings you to the results page. It says, based on the information you entered, you're withholding more tax than you need to from your paycheck. So in other words, they're saying this person is overpaying in taxes. So they're saying that the expected tax withholding is $6,250. If they don't do anything, that's the amount that they're going to pay for the remainder of the year. If they pay the taxes the same way that they've been paying, they're going to end up paying $6,250. However, the anticipated tax obligation is only $2,463. The difference between those two is where the refund comes from. So a lot of times when you get a refund, you're thinking somebody did you a favor. No, you overpaid in taxes, and this is your kickback. This is your change in most cases. Now, that being said, you don't have to overpay. That $3,787 is actually something that if you choose, you can fill out the W-4 in a way that allows you to get that money throughout the year. So now you take that $3,700, you divide it by the remaining of weeks, so that'll be 11 months. And however many times you get paid throughout those 11 months, now you're getting that dispersed in your paycheck throughout the year. So it says to increase your take-home pay, submit a new Form W-4 to your employer or pension provider with the changes suggested. If you don't change your withholding, you will receive a refund of any overpaid tax you've withheld when you file your tax return. So basically, it's letting you know to increase your take-home pay, submit a new W-4 to your employer or pension provider with the changes suggested. They're making the suggested changes. Income source number 1, how to adjust your withholding on Form W-4. Using the following instructions to download and complete a new Form W-4 to submit to your employer. You may also use the directions as guidance for an employer provided Form W-4 on an online portal. But it lets you know, complete Form W-4, personal information and filing marital status. So it lets you know what you need to do. Select head of household. Multiple jobs, you'll leave that blank. On the dependents where it says claim dependents, enter 2,436 on step 3 for claim dependents. This is what allows you to not overpay. You can make this adjustment and keep more of your money based on what the IRS form or the estimator tool is suggesting, because they know that you're overpaying and they're teaching you how not to overpay using the IRS estimator tool. That's why this is so powerful. Then it lets you know to leave these fields blank with the other adjustments because you didn't put in anything there. Then you sign it and date it. Once you've done this, you submit your new Form W-4 to your employer as soon as possible for your changes to take effect. C, return to this estimator and fill out new Form W-4 in January. So every time the new year starts, that's an opportunity to adjust your W-4 or when your situation changes. So you have the ability to adjust your W-4 multiple times if your situation changes. Situation change could be you got married, you had kids, you added a job, whatever the case may be. That's a tax altering event. And as a result, you have the ability to adjust your W-4. Now, when you adjust your W-4 and say you go ahead and resubmit the new one, and now you're giving yourself a pay increase because now some of the money that you would have been paying in taxes is now coming to you. And let's say that increased your paycheck by a few $100s. Now the goal of that extra money that's coming in is not to just treat it as extra money and blow the money. What if you took that money and started paying down high interest debt like credit cards? What if you took that extra money and you started investing that money and getting rates of return because you're invested in great things that have the potential to multiply, whether that's index funds, whether that's ETFs, whether that's crypto, whether that's a combination of those things? What if you did good things with the money? So now you put yourself in a better position so that when next year comes, you realize the importance and the power of keeping your tax dollar versus sending your tax dollars out and you not doing anything with it throughout the year and just waiting on a refund. What if? So understanding how to use the W-4 is key and critical and really can take you to the next level if you make the right decision. This has been your head of household example. There'll be several more. I'll do some that may be longer, shorter, but I just wanted to give an overview of what the W-4 is, but also give an example simultaneously so you can understand how to fill it out. And once you do this, you can basically fill it out, or you can download it pre-filled and it'll be already filled out for you, but it gave you the steps on how to fill it out yourself. That's all I got for this video. If you need access to a group of tax experts that can help you really maximize your tax refund every single year and understand taxes overall so you can best apply it to your own personal situation, links will be available. Share it with somebody else who you feel may benefit. Mr. Smith, signing out. Salute.